Yeah. Hello, guys. Good morning, guys. How are you guys doing? I hope you're okay. Alright, it's TLB here, and I'll be your host, your tutor, and your mentor for this class. And before I forget, this video is brought to you by the TRP Trading Academy. I'm going to post the link in the description of this video and also in the first comment. You can join the group so you can be also getting updates from me directly. Yeah, okay. So today I'm going to teach trend line strategy. Yeah, trend lines. So what are trend lines? What are trend lines? Trend lines are simply just lines that are drawn under a consistent trend. So let's say we have under or on top of a consistent trend. Let's say we have an uptrend like this, an uptrend like this, with higher highs and higher lows. You should know, if you have been following me, you should know what are higher highs and higher lows. So this is an uptrend. You can see the market consistently breaking structure. I see the market consistently breaking structure, break of structures consistently. Sorry, break of structures consistently happening. So what is a trend line? A trend line is a line that is drawn under a consistent uptrend and on top of a consistent downtrend. So the trend line shows trend. It shows the trend of the market. So in a downtrend, the trend line is drawn on top of it. This trend line stuff is not the normal SMC. It's like a retail trading concept. So when you have a trend like this that is going up, that's going up, 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 up. A trend line is drawn under end of a uptrend, and you expect every single low in that uptrend to touch the trend line. So the low should be touching the trend line. In a downtrend whereby the market is just going down, 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 you draw the trend line at the touches where the market touched. You can see the market consistently touch the trend line. So that's it. So the market consistently touches the trend line. So that is trend line. That is trend line. Oh, yeah, that's a trend line. So now, what is the trend line strategy? I hope you understood the trend line. It's simple. You don't need to complicate things. You don't need to complicate things in trading by definition. Just know the concept and how to use it. That's all. So now, how do you use trend lines? There are two ways actually to use a trend line. We use a trend line by the trend line break. A trend line break. What do I mean by a trend line break? So let's say we have an uptrend. This is an uptrend, uptrend, and this, where is your trend line? This is your trend line. You draw your trend line at where the market touched it, like the consistent touches is diagonal line, not a straight line. Like it's diagonal. So where the market consistently touches the trend line. So what is a trend line break? Whereby when the market, what you're expecting on the market is for the market to touch here and continue to touch the trend line and continue the, but whereby the market does something like this and breaks the trend line, and breaks the trend, sorry for the noise, and breaks the trend line. What you are now expecting is for the market to retrace back, retest the trend line or any area of demand here. So either it retests the trend line, or if the trend line is too far, it might just react from areas of demand and clear out all the liquidity. You see, in a trend line, liquidity rests on the lows of uptrends. So this is liquidity, this is liquidity, this is liquidity. So at a trend line break, your targets are these lows, these areas of liquidity. areas of liquidity on the lows. Then in the uptrend, your areas of liquidity are the highs. The highs. So let's say this is a trend line. Then you see something this. So you're expecting market to touch this and continue. But whereby when you see the market break, so so whereby you see the market break this trend line, you expect the market to come back, touch it, or react from areas of demand and target this liquidity, these highs here. So the reason the market breaks trend line is to take out liquidity. So when market takes out liquidity, you actually expect the market to continue the trend, and form another trend line. So that's it. These are trend lines and how to use them. So another way to use trend line is the continuation. Market does not always need to break the trend line. Let's say this is a trend line. Sorry about that. So let's say this is a trend line and the market is on an uptrend, touching the trend line and going up. Like touching the trend line and going up. So when the market start retracing down and comes and touches this trend line, you are expecting to buy from here. You're expecting to buy from here. So the moment the market touches this trend line, you buy and target the highs. I told you the highs are targeted in uptrends and lows in downtrends. So you are buying from here. And your target is the uptrend, and your stop loss is just below the trend line. So this is what it would look like. And in a downtrend scenario, let's say this is a trend line for a downtrend, and the market is consistently breaking structure while touching the trend line, touch, break. So when the market starts retracing, you're expecting the market to touch this trend line. Then you sell from the trend line and target the lows. And you keep on expecting that till the market breaks the trend line. Then you use your break and retest strategy, areas of demand or touching the trend line, or seek an order block or breaker block, and it takes out every single area of liquidity here. So now I'll show you that. So let me clear all this. I'll show you that on the real life chart. Now. So this we are in the XLMUSDT 30 minutes time frame. 30 minutes time frame, yeah. So trend lines. Let me look for a trend line. Look at this trend line here. Okay. You do not always expect the market to touch it perfectly. Market can just break through it small. So a trend line is validated by two touches. Two touches. So this is a trend line here. So the market came here. This is the first touch. Okay, first touch. And touch it again. So this is now a valid trend line. Like this is now a valid, very, very valid trend line. So when you see the third touch, you are expecting the market to, buy from here. So you're expecting to buy from here. But if the market breaks it, you're expecting to sell. So we can see that the market, though this one is not completely valid, not really valid, but the sell did not last long. Because market took it reacted from this other block here. So when the market, we are now looking at this break of the trend line here. Yeah. So when the market breaks the trend line, I told you that the market will come to react some areas of, either it touches the trend line or react some areas of demand, or an SMCPUI like an other block, like this other block here. So you can see that the market, anyone you took, whether the touch of the trend line, the order block, or the area of demand, let me mark out that area of demand. Well, see that area of demand. If you don't know how to mark out areas of demand, just stay with me. I might teach you that later. And if you want me to teach that, I would like you to write it in the comments. So yeah, this is an area of demand. So you can sell from any of these areas. Let's say you took the touch of the trend line here, your stop loss above this high or slightly above the trend line, and your targets, or a normal me will target this liquidity here, or I can just choose out to take out every single liquidity here. But you see, the market would have taken me out on a break even. But then if you kept your order on this other block here, seeing that area and seeing that the market is very bullish, is in an uptrend, so you would have gotten a sweet 5:1 RR, a sweet 5:1 R. So if you put $100, that's $500 good. So now look at another trend line here. Trend lines are everywhere. Just notice the trend first. See this trend line here. See this trend line here. And you can see that beautiful. Sorry. And you can see that beautiful break of the trend line there. You can see that wonderful break of the trend line here. So the moment you see a very bullish candle break a trend line, you already know that the market is going to buy. And what did the market do? It came to react from area of demand. From area of demand here. Sorry. Area of demand. Area of demand. Yeah, area of demand. Area of demand here. This should have been a missed entry for me, because no, I'll mark out my area of demand like this. So I would have missed this. You can also see a very mini trend line resembling the other one we just saw here. And you can see when the market broke it, they tested it here perfectly. They tested it here perfectly and proceeded to go up. So you keep on testing this thing. It is in the chart. It is every single where in the chart. So let's say the continuation. Let's look for a continuation trend line strategy. Okay, now look at this trend line here. This trend line here. It's not really visible. Wait, let's do it from here. Yeah, look at this trend line here now. Look at this trend line. You can see the market touched it first here. See the first touch, the second touch. So this is now a valid trend line on which we are looking to keep on buying and selling from it. So when the market came here and touched the trend line again, when it came here and touched the trend line again, you wait for a break or structure. So if you don't know what break or structure is, I go and watch the video market structure. Sorry, not a break of structure, but a shift of structure. You can see this break here with these strong candles. This strong candle is what validates your your trend line continuation. So when you see that, you immediately start looking for buys. The market didn't come back to any PO, it just took liquidity. It just took liquidity here and kept on buying. So that's, but you can also choose to enter aggressively by placing your order. Immediately you see this big candle, you just made this big candle, the next candle closes. Let me explain that very well. So you see this, look at this here. Look at this here. See where the market touched the trend line here. It touched the trend line here. And immediately it touched it. The next thing that followed was a very massive bullish candle. This one, a very massive buy candle. When you see that, you now know that there is a very high tendency of the trend line continuing from here So what you do now is immediately this candle closes, depending on your time frame, you place your buy order on the next candle and your stop loss below the trend line. Then you target any high, like maybe this high, and that's sweet money. That's sweet money. So I don't want the video to be too long, so I'm going to stop here. You go and back test it, and I would like to see your results in the community group. I would like to see your results in the community group. I hope I've helped you, and you drop a like and a subscribe. Thank you so much for watching this video. Bye guys, see you on the next video.